Okay, so let's see here. I'm going to go through the weekend process, which is more or less is pretty similar to the daily process. But I have some more time and I'll probably do some other things as well. Also, I got a question, like it's not the first time I got that question that I'll try to answer. And it's a pretty difficult one, a very broad. Let me see if I can find that. But let's start going through the process first, and then we'll approach the question. Perhaps we'll find a good place to do that. Let me see if I can find the message. Okay. Yeah, so the question is, let's say, I'm paraphrasing here, but let's say that you learn some price action, have some experience, and trade somewhat similar to me and other traders like Kalamagi. Who, I mean, I'm not in that league for sure, but like I'm aspiring to. Anyhow, like what? So that's the baseline, right? So some experience, getting the feel, having a similar style, I guess. That's my guess that this person has. And then they're asking like, what would you do to move the needle from here on? Of market hours to improve my game. And I mean, I'll repeat things that I learned from others. I think especially Kalamagi has a great way of framing learning, and together with StockMe, I mean, those are my main learning influences, I think. And then I use a lot of other traders' ideas as well. But the learning pretty much probably comes from there in my own other experience on how to learn. Like I kind of work with that in a way, at least as a touch point. Anyhow, so I think that's a difficult question, and like what would move the needle the most? And I think what you really need for my style, so let's talk about that style, is pretty much two or three things. Actually, it's two things plus market awareness. So the first thing is that you need to be able to select the few stocks that are not random and the few stocks in the whole market, the very few that actually can move your account. And I have no idea what the figure is, but it's only a few stocks that will be part of the bigger moves, like of the gainers. It's only a few that will actually move the needle. I could have said that better, but it's a very few select stocks, and some people call them leaders. I think that's not the term I like because there's too many weird connotations with that from canceling that I don't subscribe to at all. Well, I do, of course, learn from O'Neill as well. He's one of the greats, right? And so let me make this simpler. One is you need to be able to find the true strong stocks. And for me, the first headline is strength. And it's as I define it, not as other people define it, because I find other people's way of describing strength very lacking, actually. Like, at least the general population's way of like looking to O'Neill for strength. I think there's too many misunderstanding and around that, and you have to be able to define strength. Sorry for this shark is so busy. Let's find this one is also going to be all my sharks are a bit busy nowadays because of the many lines. Anything I've traded a lot. Maybe this one as well. This one? Okay. Yeah. It's gonna be like this, right? Let me find something I don't even trade much. This one is great, right? I do have some lines, but it's looking better. So, strength. Let me write something down. Like, one is strength, right? So this is box selection. Sorry for my speaking difficulties. Strength. And you have to make the understanding of, sorry for the keyboard, strength your own. This is true of everything. So there's a language, I call it a language, a visual language. It could also be described as data variables that will repeat. And you can define them, for example, days over and moving average, for example, or more up days than down days. You get the picture. I have my own way, which I think you should find. So that's the first thing I think one needs to, one could define by study. So you need to do, I think deep dives are good if you have a goal for each one, and then you add on part by part, no hurry, but dedicate 25 to 50 minutes, no other things, no, like maybe you can listen to some music if you want, but no tabs, no social media, nothing else, like 25-50 minutes for a focused study. What is strength? So how do you go about for each study? You select a few stocks that were the winners, and then you study the commonalities. Try to describe them like from bottom up, like find your language for each part. You can have like the bigger legs, you can have describe the ranges, what happens within the ranges, how many negative days, how much can a negative day be for it to still be strong. Do you want gap ups, other strength related candle types, for example, a thrust, like this is a gap up. Let me find a thrust. So let's say this is kind of a thrust, and this is as well like a really large candle, gap up. Wick plays if you find any. This is probably a wick play, for example, which kind of held there, kind of. So that's also strength. Yeah, let's look at this one was super strong a while ago. This would be a strong candle, right? It's a thrust. This is also thrust. It's don't think it's a gap up, either one. But gaps up are also strength. So that's candle types. That's part of the language, like the almost like the letters in the alphabet. And then you have other properties, right? Not being down much, not having large down days. Some people call it natural reaction. Livermore did that, right? So after a natural reaction, how does the stock move? What are the volume properties? For example, you want the start of the move, or like significant movers will have a lot of volume. Like that's just how it is. So you want a lot of volume. Do you want, like, let's get to the other part, like positioning, trapping. This is more advanced, but you can look into it. So are shorts trapped or longs trapped? Is it a double trap? Like it's a up move on big volume, a pretty sizable fade next day or following days, where in turn the shorts get overexcited and the last shorts are probably not like experts and they will be trapped, or they could be trapped if we move higher than the previous day, for example. So that's also another property of strength, or possible strength. The trap in it has power. And for example, so you need to understand other players' positioning. This is more advanced, but this is part of strength. Maybe like something you can have in mind. It's not the first parts of strength, but I'm just like saying what's top of mind for me around strength. So my suggestion, I already gave you a few pretty significant keys here, actually, and which are not often talked about. I think maybe they are. I don't know. But let me go back so I find where. So the first thing is study the properties of strength. From bigger picture to smaller things, study how ranges behave, study how price discovery for a trend. So how does this look? Can it put in many days in a row? For example, runaway move. My voice sounds really weird. For example, check if I'm over. Yeah, runaway move. As defined in Hedge Fund, what's the name of the book? Hedge Fund Edge, the latter part, where he talks like 5-10 pages where he talks about trading. The rest of the book is more macro and like hedge fund related. But anyhow, he describes the thrusts, the gaps, the gap ups, the extended candles, don't call them wick plays, but like a wick play is also strength. You want, I think, 5 of those in a 20 trading day period. Like that's one way of defining strength, right? So you can have some of these ideas as baselines and then start describing it for yourself. So that's what I would do. And the goal is to trade only the stocks that will make a difference. And it's a very select few. Like 20? Is it 10? Is it 5? Is it 1? Is it 50, 100? I'd argue all of those, you could argue for all of those numbers, but it's not 200. For sure it's not 200, like in my opinion. In my themes list, I have 225 items just to see what's actionable. But that doesn't mean I'm going to trade all of those 225. Probably not. I'm using them as a canary in the gold mine, like an indicator of what's going on. So strength, the properties of that. And another part of strength, so that's 1B. Like I already had many sub ideas or sub properties of strength, subsections of strength. But another one is group, right? So group is part of strength, but I'm just going to add it like that. So I'm not going to trade a stock without news if the other stocks in the group are not setting up or moving already. Like, that's a waste of time and funds. So that's a really important thing. So you can also study, make sure to, when you study the strength, one session you study if other things moved in that group together with it or setting up. So this, let me show you. So Oklo, right? It's the leader within this group. It has all the properties, of course, because this is how leading stocks move. My definition of leading, which I'm not going to go through. I went through some ideas. For example, more up days than down days, right? You can put up several days in a row. I'm giving examples here. It has a lot of volume on up days, lesser on down days. So very tight. Like, for example, in you have a very smooth cup. If we call this a cup, all these are cups. You're going to be tight in the lower range, right? In the best stocks, you will have tightness in the low range and volatility in the upper range. In most stocks, you will have that. But these are much cleaner. What people call clean or linear move. A linear move, this is it, right? One version of it. And what else? Yeah, my point about group. So we have Oklo. It has set up here, right? For example, like a pretty good one, 7601 here. You would have bought here. But you can also buy here, right? Like, in my case, I did not buy it. Unfortunately, I bought other things. I'm happy. There are good select stocks the last weeks. This is pretty much how our equity curve should look like. Anyhow, for me, black means alert, but not necessarily buying. But you could for sure have bought here. It looks great. But this is a longer buy area because it's a longer base. I do like shorter continuations. I love them. That's my bread and butter, actually. But if you want to have a longer explosive move, you need a bit larger base most of the time. And actually, if you zoom out a bit, you could draw. This is not regular, but you could actually draw the base as more or less sideways base like this. I don't do this, but I'm aware of it. So this is a really nice long base, and then it's how long would that be? Like a 7-8 month base, if you would look at it that way, which I do. SMR, it's lagging Oklo. at the moment. But it was also setting up, right? So it's lagging Oklo for sure, but it was getting tighter. It was doing its thing, but just later. I like 3 moves in ranges. Normally I define a range more like a box, so it's difficult to draw that here without messing it up further, but let's try. So the range is actually not the trend line for me. Let's see. So the range is here, right? And so in the box, you want more or less 3 moves, sometimes 4, so 3.5, or I want. So you could count, like try to use the trend line, whatever, but if you use where the box can be defined, you have 1 move, 2, let's call, like actually move this down a bit, because this is the range. This is outside. So we have 1, we have 2, we have 3. It goes on 3. Usually it's 3.5. So usually it needs to come down, maybe squat and go again. Like the best one is usually squat and get people out. So group moves. So what else? We have, let me find in TC 2000. Now you probably can't see that, but I have something called relative. Let me see, member of. I'll show it this way. So if I have SMR, I will have related names. So we have NN. Let me move it over here. Can you see it? Yeah. So very busy down here. Anyhow, we have NNE. Like it's also lagging, but it was setting up, right? So let's see, what day did Oklo go? So let's say Oklo started here on the 11th and then continuation on the 18th. Okay, so we go back to NME. So 11th. On the 11th, it is setting up quite nicely. So, like this is for sure, this would be a green pivot. Viable pivot. 1, so it doesn't really have 3, I think. 1, 2, these are 2, 3, 3.5. So yeah, it has 3.5. So it's a pretty good one. One very tight day before, and then we go. Very similar. So by day here is this day, gap up day. Usually, I mean, you can buy the anticipation here, but I don't like that personally. So buy day is this day. Here, and continuation this day. You can buy here, but you will, well, in this market, you might be fearful because you don't know what's going to happen the Friday on quad witching. So, yeah, it's better to buy here for that reason as well. Let's go to, what else do we have? Where's Oklo? Why is not Oklo part of this? Okay, so it's another group. In TC, but it's nuclear. We have this one is kind of related, right? And let's see, the 11th is this. Is the 9th? It's actually breaking out before. So 2 days before, I'd say. So the 9th. And then it also goes before on the 15th. And then on the same, like the 18th, right? So this is also part of the group. It is setting up. So if you're watching Oklo, you'll see that this one is actually starting to set up quite well here. It looks really well. It has the linear properties, the cleanness, right? The strength. This is the language of strength. Okay, group. Group is super, super, ultra important. Like, I can't state that enough. 2. And you have to make this understanding your own. Write in your own language. Think about it. Go on walks. Maybe discuss with other people. Find other people than me describing it, but more than anything, you have to make it your language. You can't trade without making it your own. It's impossible successfully. That's the key, right? Next part. So this is a long video already. Where is the process? How long have we been? Not sure. Duration 26 minutes. Okay, I know too much. Editing is another part, which is something I always had to work on, and I have to. So those are the unknowns. That's a personality type. Editing. This is part of the process. Those are extras. These are later. Editing, pruning, deleting things, having less of things, less list, less steps, less indicators, less whatever, less lines maybe. The lines help me really, so that's not what I would edit out. But maybe I could learn to see them without having them there, right? Anyhow, so let's go to number 2. These were extras. So number 2, but it's the second part outside of market awareness. So we have stock selection, and then we have where to buy it. And you have to do all the other things. Like, then there are base things. Basics. Basics are extras. Need to know super simple. This at the start. Super simple rules for buying, selling, stop loss. Make it dumb in the start. I hope that's English. That's 1. 2. You have to know your shit. Like, know your itch. That's all basics. You just price action. Price action, PA. You have to be somewhat, not expert, but you have to know that, like, what's a high, low, lower, high, what are bases. You need to know basics like that. You have to know, not have to, but you need to understand other players. How are shorts working? When are they scared? Those are extra will come with time, but to know your basic. Yeah. Positioning. How are others positioned for you to capitalize on it or be on the wrong side of it? For example, a big gap up late when the whole market gaps up. Senior traders will take profit or partials into that and then maybe rebuy more later in the day if they want. Like, that's part of positioning. Then you have to know basic risk management. This is like, you can't trade without it. And this means, very simply, there's a lot of parts of it, but find some good source to learn this. That are not too complex. Main thing is, if you're a swing trader, you can't go higher than 1%. And I'd say, if you're a position trader, percent. Let's do it the same way. Max 1% of your trading account. And I also suggest, if you're a beginner, this is the first part. Important. Trade as small as possible. Years 1, 0 to 5. That means max 1 to 5K dollars max. You'll lose those money, most probably. So I have more, but you need some to see. Like, the costs of trading need to be in balance. So you need some money to see if you're actually moving forward. What else? There's many other parts in risk management: stop losses, taking profits, not buying in the wrong day. Okay. So third would be, let me go timing. This is market. And market. Should I put in oscillation now, making it more difficult? Market. It oscillates, so that's okay. Basics, other basics. This is what StockBEG calls mind clarity. You have to, for the super simple rules, but make it dumb. And then after a while you can expand your repertoire with nuances. You will be able to maybe take profits into an extension, but don't do that in the beginning. Like, in the beginning, make the rules simpler. Like, if you're a swing trader, sell something into an extension. Maybe if it goes, let's say it goes, this is a simple idea. Say it goes 2 times your risk. So say you have a 5% stop and it goes 10%. Sell a third and keep your stop. Now you break even on the trade, almost no matter what. I mean, if it gaps down below your stop loss, it could happen, but it's not, like, depending on what you trade, it's not super likely. So that's a super simple thing. Don't want to give you too many ideas. Don't have too many. And like, dumb it down. And then also make it dumb in the start. Also, what else? I was gonna say, don't have too many. Not too many conflicting rules. This means know your time frame and don't hesitate. Don't create situations where you can hesitate between actions and inaction. Action and inaction. Like, for example, should I sell some or not, or whatever? No, have clear black and white rules. Black and white rules. That's good. Black and white rules. years. Okay, now I have too much. More? Okay. Let's do like this. Do another one. How can I? Now I did something bad. Ah. Let's do it like this. Okay. This is know your time frame is part of simple, right? But I'll do it like this. It should be black and white rule first here. Risk management is also basics. What else? These are editing, doing less stuff, less efficient layouts, lists, charts, you name it, right? Delete stuff, fewer stocks in lists, etc. Same thing every day. I can't write more. Okay, let's move process to its own. Let's have that there. Basics. Every day. Repeat. This is to make it automatic and efficient. These are similar ideas, but for me they're different. Okay, so these are basics. These are ideas of how to make it more efficient. So, for example, there are plenty of performance books, but there's a good question from the book. What's it called? Something what can make it simpler. I butchered the name. Let me search here. Name. It's not the name. Not Atomic Habits. How? Rolling T. Will it make the boat go faster? Okay. So that's a question for anything, ask, will it make the boat go faster? In this case, the boat, the vehicle is, will it make your equity curve rise steadily, cumulatively, or not? Like changing this field, so it looks better, or deleting it, will it make the boat go faster? That's the principle, right? So having one less list, will it make the boat go faster? Yeah, probably. Having one less screener or no screener, will it make the boat go faster? Arguably, I think yes. It can depend. Having maybe fewer stocks in your positions, will it make the boat go faster? Probably. I struggle with that. Also depends on if you are a mixed swing position trader, which I play one. So that means I will have small runners, and that will inflate the amount of my positions, right? But that's for me. I don't suggest that. I think you should actually swing trade only, and shorter time frame than other traders. I think actually this is kind of arguing against another idea, which is like a larger time frame will make it simpler. But I'm not 100% sold on that. So I think actually 1 to 3 days swing trading, where you will sell a large part already day one, is actually the easiest. It's not easy, but it's the easiest way to learn trading without fucking up too much. I think if you were a perfect human, you would probably learn day trading first without dying that way, or giving up. But then you will have difficulty holding. So I think it's best to start with swings for 1 to 3 days. Okay, now we're getting outside from what would I do? Well, will it make the boat go faster? These are process things. So, one, the basics is you need super simple rules that are black and white. Decide your time frame. Understand basic price action. That will take 2 years, I think, for me at least. Understand how others are positioned. Risk management. Learn that. That's before anything else. Understand. You have to reprogram your brain usually. Like, deal with the fact that stop losses and cutting is the most consistent idea that most successful traders all share. That's not English, but I hope you understand. That's the basics of trading. Like, for 99.9% of all traders, of course there are macro traders, but yeah. Also that this doesn't apply to. Sorry. Anyhow, now we're getting really outside the main thing. This is my brain. Sorry for that. Let's get back. So we have strength, we have pivot, we have timing. And I already talked about strength, now let's talk about pivot. Pivot is, for me, something that we learn from Livermore. You can learn from others, but he wrote most about it and is the master of this idea. So it's a point, he calls it a point of least resistance. I think point. Let me check that. Point, or is it like line? Is it line over? Oh, or is it line? Livermore. Sometimes I path of least resistance. Path or point? Path or point? Path. Okay. Path of least resistance. So that can mean what is the structural trend on this time frame? It's up, right? But it can also mean like a horizontal line or a trend line. So when we get to this point, where will it be least resistant? This is my maybe butchering it, but this is how I think about the pivot. Pivot is also about positioning. So the pivot, let's zoom in. When we come to this point here, depending on the market situation, depending on the positioning in this stock, probably a lot of shorts, right? Depending on the structure of the higher lows, maybe strength, the variables we talked about earlier, maybe we can see those variables playing out in a stock. It doesn't have to be this stock, but let's use it as an example. I mean, it's not 100% clear here, but I'd argue there's more positive days. It looks strong, it looks linear. And we have the market on the, what day is this? The 9th? Okay, so this is 4.5 billion, so that will be Russell on the 9th. Let me see. Let me actually do this. Faster. Okay, so group and market is kind of setting up here. Let's get back to, where is it? Here. So I'm going to delete this. So here, this is just an example. Is the point of least resistance to the upside or the downside? Where can it project smoother without resistance, right? That's the idea. And what would happen if those who are short are caught on the wrong side here? And what will happen when late entrants see this move and wants to take part? That's the idea of point of least resistance. So in that example, like this is so high up, what are we gonna do? Oh, maybe we should short it here. It's close to 100. Let's short it at 100. Maybe we go short at 101. This is the idea. Let's go short here. Oh, maybe don't get short here. Maybe cover here. You know, that's positioning. So, like, because why? Because market, because group, because linearity, the strength preceding it. This pivot, actually, for me, that's the pivot. Where is it most probable that the path of least resistance is. Is it up or down? That's the question. Okay, so let's get back here. First, you find strength. You have to understand it automatically. It should be like a pattern. You just know this is strength, this is not, this is stronger than this. Always go with strength. You always want a setup. That's part of this. That's the pivot. You want a clean setup where also the risk is good for the longs. So if it's tight setup, we're like with a wall against our back fighting forward. Like that's not a good analog actually, because then our arms would hit the wall, but nobody can get to us from the back. That's the point. So we are trading from this point of strength together, probably with other traders. If it's timed well, we will be with the best traders on their side against the lesser traders or the lesser investors. If you're timed right and you know how to identify strength, and if you know how to analyze the market, and you know where to put the pivot based on positioning and structure, you're golden, right? And so the next thing to study. So the first thing to study is strength. The second part of that is to study group together with that. What happened with the group and the market at that time? The second main thing to study is to take the same stocks and try to hit the pivot. I prefer horizontal pivots, but some do trend lines. You can do both, but I'd suggest trend lines. It's much easier. It's less conflicting, less subjective, and algos will most probably trade the number and not the trend line, right? Even though they can also trade trend lines, but it's easier to do the line, the horizontal line. So that's what I suggest. So how do you go about it? You can do it in many ways. You can also put your pivots and then go back and study if you had the right place where the move was explosive or not. And you have to also time it with the market, so you have to move the pivot depending on what the stock is doing while the market and sector is doing stuff that impacts the stock. And understand also that group and market could be up to 70%, something like that. I'm just taking a big number, but let's say I'd guess it's 70% of the move of the stock. Maybe more, maybe a bit less, I don't know. But that's also good to understand. So that's why group and timing is so important. The market. And the pivot is about positioning. So I don't know how to make that more clear. So you go back. So let's go here. So let's go. So this was a green line. So I guess I was thinking the pivot was here. This trend line is another way, is a 5-day close. So I could buy on this day actually. It's not perfect, but I could have. Actually, I could have bought on this day and be not stopped out, but almost. It's a bit, this day is too early, I think. But if we move this down here, 1, 2, 3, 4, 5, you could buy on this day. Here. Anyhow, but if you don't buy there, or here, on the gap up, then you could find a small continuation pivot here. Perhaps. I don't think that's perfect. But it was a pivot, and also it kind of hit that when it came back. So it was a pivot. So when I do the black ones, it's an alert pivot. Now in this case, I think I drew it here to explain something. Let's go to another stock. Okay, we're quite busy here, but green means pivot to me, viable pivot. And I'm not sure where this one is actually. I'm very unsure about this one. Maybe it was here, down here, I don't know. Let's delete that one. So here I think actually I made a small mistake. So here we have 1, 2, and it's a continuation. It's above the moving averages. It's not like going for, if it goes past like the 5 and the 10, it's gonna come down to the 20 and maybe 50, but it's not doing that. But there's a lot of like resistance here. For example, this line here, also like some here, there's some here. So there's actually some, I would say, and that's actually where it stopped, right? So I wouldn't have this as a super important one, but just something to, what happened, to be aware of, that I wouldn't put a line here, but there's some resistance supply there. Resistance as path of least resistance, right? There's some supply and resistance there. I hope I'm not confusing you with the term resistance here, which is for both up and down, whilst supply is liquidity, like there's sellers there, right? So my mistake is this pivot, which is fine above this high, right? You could buy. I actually bought in the lower end. I'm not going to go into the lower part too much in a low pivot, but basically, if we would take this range here, you have one pivot in the higher part. Let's say, for simplicity's sake, it's here. So actually the box is here. So one is here in the higher end, either like you could do the, I'm not going to go into the specialist idea of how David Paul and Wyckoff select pivots, but it would be around here for the high, and it would be around here, I'm guessing, for the low. And in this case, if we have a really small box here, the buy here is fine. This actually means I was stopped out, but I think I rebought at the exact same location that same day, a bit higher then. So I was stopped out here in pre-market maybe. And then I think I didn't add a new one, but I think I added here again. Anyhow, let's get back to pivots. So I think like the real pivot maybe it's a bit difficult to find, but we could go left side over here and maybe actually this is the pivot about 130. See? So, the point is you should study where the pivot is and learn, make mistakes, make improvements, and just get better at selecting the pivot and think of patience, and understand the setup idea, path of least resistance. A breakout is not just going above something. A breakout is about positioning and timing and strength. So that's how I put it all together. And the study is 1. Strength. What are the properties of strength? 2. Pivots. Improve pivot selection and understanding of it. Market, I'm not going to speak about, others have. Market breadth or market awareness. What situation are we in? How high up are we in the market? In breadth, in the sector? What news events are coming up? What is the macro picture? All these things takes time to learn and make simpler. That's also something you can learn, but it's too much for me to go through here. So I guess this will be the video, and I can't go through my process today because now we're like more than 1 hour in, I think. Yeah, just past 1 hour. And I pretty much shared a lot. I suggest you replay this many times. Ask me questions on @Kulturdesken on Twitter or here on YouTube. This means culture desk in Swedish. The culture desk. So, because I mix the two. Actually, I don't. In work, I do. Anyhow, that's the video. Like if you liked it. That's not the point. I don't want that many to watch these videos. I want people who can actually be successful watch these videos. So if someone learns how to become a way better trader from these videos, then that's success. Okay, that's the video.